This is a video tutorial about filling in your details on the income and expenses spreadsheet of the foundation module. Now there is a link in the manual, but I'm aware that not everybody is going to print that out, so they're also available as downloads on the foundation module on the forum. So if you go to the foundation module, click on downloads, find income and expense spreadsheet. Now if you just hover over the income and expense spreadsheet and then right click, I'm using Internet Explorer at the moment for this one, so if you click on Save Target As, that will download it to your PC. If you're in Firefox, it will say Save Link As. Just remember where you've saved it to your PC. Quite often using the desktop is a good idea, but for those of you who know your PCs quite well, download it to a folder called something like Money Magnets so that you can keep track of it. When you open your income and expenses spreadsheet, this is what you'll see. If you're following along with a paper version, you can either download a paper version from the forum, or you can just get your own piece of A4 and just draw a line down the center. Just if you see this blue line here, just think that's the same line as the line that would be on your paper. On the left hand side you're going to have the income, and on the right hand side you're going to have all your expenses. So I'll explain a bit more of the sheet and we'll fill some in as well. Now the columns that we'll have here, and that you'll need if you're drawing this up on your own, is the description. Now that's where the money coming in is actually coming from. It could be a salary, partner salary, business income if you're running a home-based business, maybe some dividends if you have some shares, anything like that at all. And we've given you some suggestions down here. Those aren't the only ones you can use, and if they're not appropriate, you can just type over them. The amount column is the amount coming in. The date column is if it's a recurring income on a set date. So you may get paid at the end every month. You can put a date in there. The frequency is just a drop-down option, and it says how frequent that amount is. So it could be a daily amount, a weekly amount. The F is for fortnightly, and that's for every 2 weeks, a monthly amount, a quarterly amount, a half-yearly amount, or even a yearly amount. Because, for instance, some interest that you get on savings may only be every year. The interest is really for the interest on any savings that you have. If you have them in bank accounts, credit unions, wherever they may be. Just so that you get an idea of what interest you're receiving. Because it could be there are other banks out there or credit unions that would give you a much better rate of interest. The monthly amount is actually calculated for you. Wherever you see any of these boxes with the orange background, it means we're going to do the calculation for you. Obviously, if you're working on paper, you're going to have to use a calculator and work that out yourself. On the expenses side, it's very similar. Once again, we have the description. Now we've entered a load of suggestions down here, but some of them may not be applicable to you. For instance, if you don't have kids, there may not be any school payments. Hopefully there wouldn't be. So you can either just delete that, or you can just type over it with something else. It's your choice. The amount, once again, is the amount going out. The minimum amount is really for things like credit cards or store cards, where you may have a lump sum on the card, but you're only paying off a minimum amount every month. For example, you may have £1,000 or dollars on a card, but you're only actually paying off 40 every month. The 40 would go in that column. The date, once again, is if it's going out every single month, and the same sort of date every single month, just to give you an idea of when your money is going out. The frequency is just the same drop-down menu as before with the same options. The interest rate, this is really for your credit cards and store cards, because it's to make you realize what the interest rate is on those cards if you're not paying it down every month. It could be that you could switch to other cards, other store cards, that would give you a lower interest if you're not able to pay them off every month. The amount outstanding is what we've talked about before, really. This is where you'd put any amount outstanding on your cards. So if you're only paying off the minimum payment, you're going to have that same amount almost every month because you're going to be paying off very little of the actual capital there. The monthly amount, that again we're going to calculate for you, so that'll be your monthly amount that's going out every month. The cancel column here is just when you come across something and you think, you know what, I could cut back on that. Maybe you subscribe to a magazine that you could get from the library. Anything like that, you can put yes if you want to cancel it. Obviously you can't just cancel your rent or your mortgage or your food or anything that's a necessity, but if you come across something and you think, you know what, I really don't need that anymore, just enter that, so it makes you aware of what you can get rid of. Now the totals up here, the first total here is going to be your total amount outstanding on your credit cards and store cards. People often have what they think is small amounts spread out over several cards. When they start to add them up, it can be a much bigger amount, so that's what that total is there for. This total is going to be your monthly total of everything that's coming out of your account. Now similarly, on this side we've got your total incomings every month as well. Now at the top here we have the big total. This is going to be the total of your income minus your expenses. So those following on paper will have to write down is the income minus your expenses. Now hopefully this will be a positive number. If it's not, it will go red and negative on this spreadsheet. Whatever the figure is, don't worry, don't panic. That's just a reflection of what you knew up until now. It has no reflection on what you're capable of in the present or what you're capable of in the future. So whatever that figure is, don't worry and don't panic. You're taking control of your financial life now. That's why you're doing this course. That's why you've been in touch with us. And all this really is to find out where you are right now. You're trying to get from A to B. You need to know where A is first, so that we know how we can help you to get to B. Let's go through and just enter a few figures so you get the idea. Let's say we had a salary of $2,000 a month. So the frequency will be M there. Until you fill in the frequency, the monthly amount won't appear here. You'll see that the total's also gone up there, and the total's also increased there. Let's say you had some interest and you got 100. Say it was every year, so you're actually only getting $833 a month. It's still better than nothing. So you fill in this side completely. Any form of income you've got, so you may even have some benefits that are coming in maybe on a weekly basis, you fill that in there. You're probably going to have more expenses than incoming. That's normal for most of us. So let's say you had rent of $600. That was going out every month. Now what you'll see is this figure here will go up. This figure here will come down, because that's taking away your expenses from your income as you're filling this in. Let's say you had 160, you've spent that on food, and that was every week. Once again, this figure's gone up, this figure's gone down. You may have credit card payments. Now the actual amount on the card could be 1,000, but you're only paying off the minimum every month, which is 40. That's per month, so you fill in the M here. The interest rate on your card, when you look, could be 24. And the amount outstanding, well, we've said that's 1,000. You're only paying off 40 every month, though. You may have another store card that you've got 500 on. You're paying off a minimum amount again. Every time you pay off the minimum amount, you're really only paying off the interest. You're not paying anything off the capital, which is why it can take so long to pay down. You may have a mobile phone, which you also pay out monthly on. You may have a home phone that pays out every quarter. You get the idea here. You just go down filling it in. Have all your bank statements with you, your receipts. This isn't a difficult process. It just can be a time-consuming process. And for some it can be emotional. because they're finding out how much they don't have at the end of each month. Like I said, don't panic about it. We're here to help. You can go onto the forum, you can talk to us there. This is just to find out where you are now so we can start getting you to where you want to be. It's as simple as that.